Hello everyone, this is Kishore. Welcome back to my channel. Today I'd like to go over major market indices analysis, Jackson Hole takeaways, earnings and economic calendar, NVDA earnings, global liquidity and CTA estimates, the window of weakness, and finally fiscal expansion and ease of monetary restriction. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. Fear and fear and greed index, it is in the neutral. We know that last week it is in the fear, and the sentiment changed from fear to the neutral this week. And this is weekly heat map for the ETFs. Most of the ETFs are green except the inverse ETFs. And sector performance, on Friday all sectors are green, and for the week all sectors are green except the energy. Energy is down just 0.09%. And key takeaways from the Jackson Hole meeting, Powell says time has come for to lower the interest rates. That's a really good sign for the small cap and real estate stocks. And this is S&P 500 historical performance post Jackson Hole. So this data shows after Jackson Hole meeting how the S&P 500 performed. Most of the time it closed green, only very few times it closed red. And this historical data shows like how long Fed rises the interest rates and how long they raised it. And after that, on the right side, you can clearly see after last rate hike, how many months they took to cut the first interest rate hike. So 2022, the black line, they raised the interest rates almost 15 months, and in the July 2023 to the present, now they're cutting the interest rates after almost 13 months. And this global liquidity index seasonality, the light blue is the seasonality chart, and the thick blue is the data. So right now we are rising up, which is good. So the liquidity is coming into the global markets. And this GS Global CTA estimates. CTA means Commodity Trading Advisors. They do trade across the globe, and they want to buy the in next 1 month. They want to buy the in the market even when the tape is flat, up or down, which is good for the equity market. And this history does not repeat, but it trends. The CPI, I shared this chart in the last week meeting, last week video also. CPI thick blue is 1967 to 1985, and the light blue is CPI 2014 to 2024. We are at the inflection point right now. So when Fed start the rate cuts, let's see whether inflation goes up or down. And this is data between this chart shows like the data of MEX 7, how the MEX 7 performed and how the remaining 493 stocks performed in the S&P 500. Last couple of quarters, MEX 7 outperformed the remaining 493 stocks. Only in this quarter, 493 stocks performed better than the MEX 7 stocks, which is good, and it shows the clearly rotation of the money from MEX 7 to the other stocks. And this chart shows like primary mortgage market summary. Mortgage rates are down from 7.5 to 6.4%. And in the media, we know that when interest rates goes down, home prices up. But this chart shows year over year shift in the US home prices. This came from the Jillo forecast in the Resi Club. And the home prices are going down, and they're expected it go a lot down in coming months. And one of the main reasons I see is US housing is extremely unaffordable. This is the affordability index. It is all-time low compared to last 30 years. This index is calculated based on the home prices, interest rates, salaries, and the employment data. And breadth in states, unemployment leads to national data. So the blue thick line is number of states with higher month over month unemployment. So it is rising up. It is almost more than 5% up. And then the orange line is thick line is unemployment rate. Unemployment is also rising up. So these two are giving the headwinds to the home prices or home buying index. And this revision suggests more moderate US payrolls growth. So what is happening is when the economic data is releasing, they release the data and then they do the revision for that data. So recently the data, whatever they're releasing is giving the higher data report is coming, and later they are revising to the down. So this week they down like 818K. Similarly, it is happened in the 2009 also. And it is not just happened for the unemployment data. This is happening for the retail sales also. In retail sales also, they are giving the good data, and then after a week or 2 weeks they are decreasing that data to like 0.1% to the 0.2%. And this shows shopping for rooms, flights, and cruise slows. So visiting the websites to top brands fell in July. So this chart shows like July 2023 to July 2024, accommodation, airlines, and cruise line search on the websites is down a lot. And this is Atlanta Fed released it like they are decreasing the GDP from 2.4% to the 2%, and this is not a good sign for the GDP growth. And not only just Atlanta Fed, The New York Times also released another data, dynamic factor model of US economic growth. It is shrinking. It is right now just about 0.05%, which index points. If it goes below zero, then there is high chance of the recession. And this next week economic calendar. On Tuesday we have S&P Case-Shiller Price Index, consumer confidence, and on Thursday we have initial jobless claims, GDP second revision, and pending home sales. All these data are very very important. And on Friday we have PC data. This really helps whether Fed is going to cut 25 basis points or the 50 basis points on the next FOMC meeting. And this next week earnings calendar. On Wednesday after market close we have NVDA, CrowdStrike, Salesforce, FM, and October release. All eyes on NVDA earnings right now and also the CrowdStrike. And on Thursday after close, we have Dell, Lululemon, Ulta. I'm interested very much of this companies earning results, how they are going to be, because they impact a lot on the stock market. And this is another news. Japanese CPI overall nationwide actual came 2.8%. The forecast is 2.7%. We know that few weeks back when Japan raised the interest rates, carry trade issue came, and stock market is down more than 1,000 points. And this week they got the CPI worse than the expected one. So let's see what they do in next coming weeks. And in the below you can clearly see 2024 election forecast. Right now Trump is having the higher hand compared to the Harris. So based on the seasonal chart or the chart last week I shared, so if Republic is going to win the elections, stock market goes down. If Democrats are going to win, then stock market goes up. So based on this poll, looks like Republicans are having the higher hand. And this is SPX seasonal composite 4-year presidential cycle. And based on this cycle, there's a weakness of window of weakness on from September 6th to October 9th. And this is ES futures data. So there is a huge liquidity at 5250. It is way below than the current level. Looks like it is a little bit cautious sign. And whenever there is a high liquidity, market tends to go there. And this COT index, S&P 500, Nasdaq, Russell, Dow Mini, all are showing neutral index. So there is not bullish sign or there is a no bearish sign. VIX futures are showing the bearish sign, which is good for the equity bulls. And SPY daily chart, last couple of days it is going the sideways. Huge compression is going on, but momentum is going down, which is not a good sign for the bulls. And SPY weekly chart. So right now we are very close to the 565 levels. If it breaks, the next level is 599 level. RSI is going up, MACD is curling up. So weekly chart looks good on the SPY. And this is SPY Monday options chart, and a lot of positive gaps is there between 560 and 565. So there is a high chance market can go sideways or can go down. And this QQQ daily chart looks like last few days it is going the sideways, and it rejected the 0.786 level of the Feb level, and momentum is going down. So this is not a good sign for the QQQ bulls. And this is QQQ weekly chart. It rejected 0.786 level with the kind of shooting star kind of candle. Not exactly shooting star, but it's kind of a shooting star. So with the low volumes. So this need to be, if bulls want to go up, first they need to break the 487. Then only they can reach the 504 levels. And this is options for the Monday. Huge positive gets at the 485 level. If it 485 level breaks, then it's a good sign to it can go to the 490 level. And this is dark pool for the QQQ. Lot of dark pools at the 480 levels. So this need to be break. Then only they can go to the 484 or 490 levels. Otherwise, they can easily come back to the 474 levels. And this IWM daily chart, huge bullish candle on Friday with a huge volume. That's a very good sign for the IWM bulls. And this is a weekly chart. Looks like three white soldiers kind of candles here with good volume, not great volume, but if based on the interest rate cut signs and all, it is really good for the IWM. If it breaks, then 228 and 240 are the next levels. And IWM options for the next week, for Monday, 220 he's having a huge positive gaps. If it breaks, then 224 is the next resistance level. And this is a dark pool for the IWM. I do not see any major dark pools came on Friday, even though Fed said like they are going to do the rate cuts. I do not see any major dark pools. That's a little bit concern for the bulls. And as SMH, we know that this is an ETF for the semiconductors. We know that this is one of the major sector which performed well, and this is the one which pulled the market up. So right now, last couple of days, it is going the sideways. Huge compression is going on. Momentum is going down, which is not a good sign. And this is NVIDIA daily chart. All eyes on NVIDIA earnings this week. And last Friday, it is going sideways. Huge compression is going on. MACD is going down. And this week, $15 is the implied volatility, either upside or downside. If it goes upside, 172 is my resistance level, and if it goes down, then 116 is the support level. And this dark pool data for the NVIDIA, lot of dark pool on at 130 levels. No big dark pools on the downside or upside. So these are all waiting for the results. Looks like, and NVIDIA earnings by different sectors like data center, gaming, and all. Data center is the major segment for them. Let's see how they're going to perform and the results going to be, and how the NVIDIA earnings impact the other stocks. These are the major stocks which will be impacted a lot with the NVIDIA earnings. And the summary is, rate cut helps small cap stocks. Fiscal expansion and ease of monetary policy might bring liquidity to the market, and sign of money rotation from Max 7 to the other S&P stocks. And we saw that Max 7 underperformed compared to the other 493 stocks. Global liquidity cycle is going to the upside. That is a good sign. CTA estimates also upside. I mean, they're going to buy either flat tape or down tape or the up tape. And major concerns are Japan inflation, because Japan inflation came worse than the expected one. GDP is shrinking. Atlanta Fed and the New York Times, the GDP estimations are going down. That is not a good sign for the economy, and rise of unemployment. And getting close to the window of weakness based on the seasonality, September 6 to October 9th, market can go down. And finally, all eyes on the NVDA earnings. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like them, please subscribe. Please hit the bell icon so that you'll get notification whenever I upload a new video. Please share this content if any of your friend looking similar kind of content. Thanks so much. Bye bye.